There you go.
There I go. Can you hear me now?
Yep.
Great. I started to say good morning, good afternoon.
Right? So this is kind of our first little video interview. We're going to go ahead and give this thing a try. I was thinking we'd start off by just you kind of telling the people a little bit about yourself and how you got into lending.
Sure. Oh my goodness, I started this back in 1985 when I was working for Savings and Loan. I was a branch manager of all things, and they asked us to start doing some mortgage loans. And back then, we had things called good faith estimates. And when someone said, "What's a GFE and points?" I said, "I have no idea." So that started me on the track to mortgages. Once I started doing them, I realized I really enjoyed working with folks. I really felt like it was a service that was wonderful to be able to provide, and especially on first-time home buyers, seeing them get into their homes. So that got me started in the business. And then almost 14 years ago, Rock, my husband, came to work with me as my assistant. So we now are able, as a couple, to be able to work together and help other people in getting into their homes, whether it's a first-time home buyer or someone buying their second or third or fourth home.
Very cool. And you said you work for which bank?
I work for Town Bank, and we love being here. Why? Town Bank is a fantastic bank that is really focused on their employees. The CEO of the company every year, for example, sends all the women at Valentine's Day carnations. I mean, how many companies do that? And so they're wonderful with their employees. They are very conservative in the things that they do, which sometimes can be frustrating, but at the same time, it has positioned us to be a very strong bank and mortgage company that's able to do a lot of business, offer a lot of programs, and be able, especially today, right now, be able to meet the demands of this market that may bring down some of the lenders that we see out in the marketplace right now. Town Bank is also very community friendly. We're very focused on the community, serving the community, and that's all aspects of the community, whether you're making $25,000 a year or $2 million a year. And I think that that's really important for a bank to be able to recognize all of the people in the marketplace and try to serve them.
Very cool. So what do you think, you touched on this a little bit, what do you think makes Town Bank and yourself different in your approach?
I think what makes Town Bank different is that we are still a local community bank. We are focused on the community. Town Bank does a lot of giving and charitable work within the communities. What makes me different is that I really have a heart to serve specifically first-time home buyers, and I do other business as well, but primarily first-time home buyers. I feel like it is really almost a mission work, and sometimes it is when we have challenging situations and credit and so forth and working with folks. And it's something that we continue to stay with our clients. We've had clients we've worked with up to 10 years before we finally got her in her home. And unfortunately, a lot of lenders, being salespeople, and we are all salespeople, myself included, but a lot of times salespeople don't see the long-term goals. They just see the here and now. And if they can't fix it and do it the here and now, then they just move on to the next deal. And then even if you've got someone with good credit and so forth, especially as a first-time home buyer, a lot of them don't understand what's going on. They're scared, they're nervous, they don't know who to trust. And so that's something that we really pride ourselves in doing in terms of providing answers, being there, never telling anyone, saying, you know what, no question, it's too dumb. We want you to know what you're doing.
That's one of the things that one of the reasons, and for this audience, a lot of you guys already know that I work with you guys quite a bit, and that's why I asked you to be on this. One of the things that I've really, really appreciated about your service is just your willingness to hold people's hands through it and kind of get people where they want to go and not let them get intimidated, if you will. Because I get a lot of clients who are kind of in the first stages, and they really need to, they need to figure out a plan to get where they're going. And the first step is just kind of talking to you guys and figuring out what they need to do. And even if they're not qualified, you guys will stick with them, which I thought was really cool. I know I'm just answering your question for you, even though you answered it. And so to touch on that a little bit, if somebody is just interested, they're not sure where their credit is, what would you say is the first step to kind of start getting ready? Is
The
there a
first step
point,
is
I was gonna say, is there a point where it's too soon to come and talk to you guys?
it's never too soon to talk to us. If you're not really sure where your credit is, but you don't want to do anything for 6 to 12 months, it's not too soon to go on and give us a call. Let us get your information. Let's pull credit. Because if there are issues with credit, then it gives us plenty of time to be able to work on it, work with the client, the buyer, in getting their credit score increased and improved. Nowadays with credit, there's something called trended data, which is basically the credit agencies are reporting how you make your bills, pay your bills every single month. So if you have a credit card, for example, that you pay off every month, that is going to be a better reflection than if you have a credit card that you make your minimum payment every month. And what that has done, even though we were all assured it wouldn't hurt credit, and it really doesn't hurt your credit score per se, what we have found is that it takes longer because of that to fix your credit. So in the past, I could tell someone do this and this, and in 30 to 60 days, their credit is fixed. Today, I may have to tell someone do this and this, and your credit will be fixed in 12 months. So we certainly want to go on and get ahead of the curve as soon as we can. Doesn't cost you anything to have us look at our credit. Nothing other than the time that it takes to talk to us, fill out our online application, and let us pull your credit. The great thing is at Town Bank, which is another advantage with Town Bank, is we have a credit analyst who works in our corporate office, and she's able to look at a credit report and tell us, okay, how do we get this credit score from a 620 to a 660? Here's exactly what you can do. Here's how long it will take. Now, sometimes, every once in a while, we may actually get it fixed sooner than what she tells us because she's just working on algorithms through the credit agencies. But, it's great to have that service. And again, it's a free service. So it's not hurting you at all for us to take a look to see where things are and what we can do. And who knows, a lot of times people will come in and tell me, I'm not ready yet. I pull their credit and their credit's better than they think. I go on and qualify them. And in a couple of months, guess what? We have a contract and we're in loan application instead of 12 months from now.
Which is excellent because a lot of, like you said, a lot of lenders are just, all right, you're not ready, done, see you later.
Right.
Give somebody a plan and just kind of tell them where to start, I think is awesome.
Right.
So what you mentioned the credit score going from the 620 to the 660. And I know we've talked about this and I stay on top of most of these things as far as the lens stuff. What are some of the changes that we can expect from the virus? I know there's some mortgage overlays and so forth that we can have kind of already started to affect us. What do you see like moving forward?
Well, let's talk about where we are actually just today.
Sure.
Today, and I've talked to, in fact, just today, I've talked to several other lending friends at other institutions. Many lenders, especially on the government loans, particularly, that's FHA, VA, rural development loans, have gone to a much higher minimum credit score. We're seeing scores anywhere from 660 to 680. And I'll talk about that in a minute, why we're seeing that. It's a little complicated, but I think it's important for your audience to kind of understand because there's so much fake news out there and we're not getting the right messages. So you're seeing tightening up on credit scores. We're also see some tightening up on debt ratios. For example, we used to do an FHA loan. You could possibly get an automated approval with a debt ratio up to 55%. A lot of lenders now are pulling back and going, we're not going to do it past a 45% debt ratio. Fannie Mae, just the other day, without any real announcements publicly, has tightened up their system to accommodate the new concerns going forward. So when we're using automated underwriting systems, which all of us throughout the country use, the Fannie Mae Desktop Underwriter and Freddie Mac Loan Prospector, DU and LP, we all use the same systems. They're not built differently from company to company. So we're all using the same systems. You have a loan approved in the system, it's not going to happen. And so one of the things too that we're seeing is most lenders have cut out what we call manual underwrites. So if you can't qualify and get that automated approval, the lender's not going to be able to do your loan. That's going to affect folks in a Chapter 13 bankruptcy, for example. Those we could still do under HUD guidelines, but if you're not 2 years past the discharge of that bankruptcy, we had to do what's called a manual underwrite. Well, now, today, nope, we can't. So those folks have to wait 2 years past their discharge. So there are a lot of changes that are coming up and a lot of additional factors that are being layered into that underwriting that's tightening up as well, even more than where it was. So in our business, it doesn't mean, though, we can't do business. It just means we've got to figure out, okay, so if you've got a 640, how do we get you to 660 or 680? And for most folks, we can probably do it pretty quickly. Sometimes it's just a matter of pay down a couple of credit cards to maybe a $30 balance. Now, then the challenge becomes, do you have money to do that? And if you're not working, you might not have the money to do that. But still, at least we know we can build a plan. Now, kind of getting back to why is this so big right now for government loans? And this is an area where I, even in this business, struggle to completely understand. But with the stimulus package offering to people doing forbearances on mortgages, mortgage payments for 3 to 12 months, the concern is that statistically and characteristically, many of those are going to be folks that have government loans. The challenge is, like with FHA, if you don't have 6 months of on-time payments and you're in a lender who has originated a mortgage loan for FHA, then they won't insure the loan. Well, we have folks, we're already in the industry seeing folks who are closing on their FHA loans and are already asking for a forbearance before they've even made their first mortgage payment. What that means is we now have to get to a point where they're not only back to making their mortgage payment, but now they have to make 6 months on time in a row before we can get our loan insured. So what does that mean to a lender? You have an uninsured high-risk loan hanging out there for an indefinite period of time right now until you can show you've got 6 months of on-time payments. And then in addition to that, a lot of these loans are bundled up with servicers into mortgage-backed securities. Well, those mortgage-backed securities, that servicer or that lender has to continue to make that payment, that mortgage payment for each of those clients to the mortgage-backed security, whether that client or homeowner is making their payment or not. So if you're a large servicer and you have a large portfolio of loans where even a small percentage, 10, 15, 20% of your business, you're having to offer forbearances to, but you're still having to make those payments to the mortgage-backed securities. Now, all of a sudden, you're in a situation where you're losing millions of dollars every month. So in order to mitigate those concerns, everyone is tightening up on the credit profiles and the rates and the points, specifically for government loans.
And so that's not going to affect like a conventional loan as much.
It is affecting some conventional business. For example, cash out refinances, there are a lot of lenders that have just said, we're not doing those, period, end of sentence. So if you want to refinance, you got to be refinancing your current mortgage and not getting a penny back outside of that. Other lenders are still doing, like Town Bank, we're still doing cash out refinances, but the points that you got to pay to get the rate, they're a little ugly. So if you want to do a cash out refinance, I would tell you, unless you're really desperate right now, you might want to hold off until the market settles back down again.
What do we expect interest rates to do? Do we have any idea?
Oh my gosh, that's the
I know
million
that's
dollar question.
a roller
Um,
coaster.
yeah, well, the thing is, what's interesting is, of course, when the Federal Reserve went to 0%, everybody thought, oh, mortgage rates are zero. Well, no, the Federal Reserve funds rate is the rate that banks borrow their money. It has nothing to do with mortgages. So mortgage rates are based typically, historically, on more your 10-year treasury bonds with some interaction with the stock market. Usually when those things are going down, you see mortgage rates going down as well. Well, the 10-year bond rates have gone down, and what have mortgage rates done? They've gone back up because all of a sudden lenders had this flood of refinances and all went, oh, wait a minute. We are really concerned about having this large a book of business at such low rates, because then if we hit a recession or even inflation and it jacks those rates back up again, now we've got all these loans underwater that we can't sell, we can't do anything with, they're below market, below even where we're going to have to borrow our money. So a lot of this is really a pullback in the lending community, trying to find a place where we can still do business, be lose our businesses. And so with the mortgage rates are still great. You know, I hear people complaining about a 4.5% rate, how bad that is. My first mortgage was 12.5%, and we were thrilled because it had just come down from 16. And I remember telling my husband, oh, we've got to do it right now. They'll never be lower. So when I see, in my perspective, 4.5%, I'm like, y'all don't know how good you have it. But even at 4.5%, we're still talking about some of the lowest interest rates in 100 years.
Yeah.
So I think we all need to get past this thing of it's got to be 3 something. Well, you know what? That's great. There are still some 3 something rates out there if you're willing to pay a whole bunch of money to get that, okay? But if you can still do a loan and it fits your budget in terms of the payment, you can come up with the money to close. 4.5, even 5, we don't see those now, weeks ago, but even at 5%, I'm like, it's still good rates. You're still, what's amazing to me is that people will buy a car and pay 12, 13, 14, 15% and not bat an eye. But then everybody chokes at 4.5 on a mortgage. And I'm like, well, I would, 4.5 on a mortgage compared to what I'm getting on my car, I'll take the mortgage all day long.
Yeah, absolutely. So with all of these changes and everything we're seeing and kind of the uncertainty in the marketplace, who do you think should be buying a house right now? Is there a certain profession or group that should kind of think about taking advantage of these low interest rates?
Well, clearly, if you're in an essential job or you're a government worker where you're going to be getting your paycheck and there's not a concern about you losing your job, now's a great time to be out there looking. I tell a lot of my first-time home buyers, this is the time for you guys to be looking if your job puts you in a place where you feel confident enough to do that, because since everybody is sitting at home, a lot of people have kind of put the brakes on buying and so forth. So my first-time home buyers that are out there aren't having to come up against 10, 15, 20 other contracts. They might be competing against 1 or 2 other people. That's way better than before this all started, when I had buyers that were competing in situations where they had upwards to 20 contracts. Yeah. So I'm like, hey, now's the time to get out there and buy. The rates are still great, and you may have a better opportunity to, get a property. And the other thing is, because there has been kind of a pullback in people looking for homes and buying, we're not seeing in most areas the level of pushing up the prices, overbidding and everything, because I think people are being much more conservative now. And that's a good thing for the first-time home buyers in particular.
Yeah, I was gonna say, I'm a realtor, as everybody knows, and I'm on both ends of this thing. and we're seeing, you know, where we used to catch momentum on the listing side, just because you got several offers, you could get, you know, more than the comps show. And I did notice also that appraisals have started to be a lot more conservative. Just, I'm not sure if that's a mandate on
Yes.
the bank side, or they're just saying, hey, look, we can't give you, you know, the inflating market because we're not sure. The other point that I would add to that from the agent standpoint, anybody who's on the market right now kind of has to be. They plan to be on the market. They've got to move. There's not too many people that are like, well, let's just test the market, you know, in this particular time.
Right.
Well, thank you so much for doing this, and we will be in touch again soon.
All right, sounds great. It's good to see your face, and I wish everybody out there lots of safety and health.
Yes. Well, thank you so much, and
all right.
yeah.
Thanks.